80. Anything above 20 is considered, fairly elevated, a little bit concerned. Investors are kind of concerned. Anything above 30, and investors tend to be very, very bearish. I find that the VIX serves as a contrarian indicator. Again, super high VIX spikes represents strong buying opportunities. Right here again, you see how this kind of has a little bit of a drop here, and the VIX goes up. Again, right here, the VIX is high, the market's relatively low, and that's why I like to follow the VIX.
Let me ask you a couple of questions, and Mr. Palms, you can jump in here as well. When we're talking about one thing, you mentioned a black swan. Our viewing audience may not be familiar with that term. We are. So you may want to share what a black swan is. And then let me ask a second question after you answer that. Or maybe I'll ask the question and you can just go into it. My second question would be, where are we in relations to today with the VIX? And what real point are you trying to make in relationship to today's VIX reading on this chart for picking? So those are the two comments or questions I had.
Okay, certainly. And those are good questions. A black swan event is some unforeseen, tragic, or some event that will adversely affect the market, such as when way back in March of 2020, when the world economy was shutting down because of the COVID-19 precautions. That's when the market just really slid down and down and down and down. And that caused a lot of panic selling. Now, the VIX in today's volatility, unfortunately, I mean, it has gone up and the market has come down, but the market has come down from an all-time high right here. And there's really not too much fear in the market. I mean, sure, there's a lot of volatility, but I would feel more comfortable if the VIX were up here or up here as this market is coming down. So in essence, I think because the VIX is not as high as some of these other super spikes, that the market may have more room to fall.
Exactly. And that's the point. That was the point. Because the VIX, there's not enough fear in the market, and the market has been falling. That is an indicator that the market could continue to fall because there's not enough fear. The VIX is too low. When the market is falling, you want that VIX to spike up because fear will drive an indicator that we are bottoming. We're at the bottom of the market. So go ahead, Patrick.
And just to conclude, and the reason why you have some significant volatility right now is that the interest rates are moving higher in anticipation that the economy is going to be strong. So any strong economic indicators that come out from various sources may spook the market because people are feeling more confident. And as people feel more confident, they're not going to be as scared unless you have something really, 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 really extreme to hit the market. And even though the volatility has been significant the last few, maybe a couple of weeks, probably not enough because people are feeling confident about their economy.
Yeah, the market is going to go down based on events, but we will see because none of us know. The market is super unpredictable.